The 1% don't actually make more money than you. They just manage it better. They follow a system to make sure profit consistently shows up in their bank account. And today in this video, I'm going to show you exactly what that system is so you can make sure more profit is staying in your bank account. So the first thing is the 1% don't use the pay yourself last formula. And that formula is revenue minus expenses equals profit. This sets up a business owner for failure. This sets them up to spend all of their money and at the end of the day be left with pennies. What the 1% do is they actually use the profit first formula and flip this around. Revenue minus profit equals expenses. So what does this look like in practice? Let's say we have Jimmy, the business owner. His business makes $250K in revenue for the year. He spends $210K, and at the end of the day, he only makes $40K himself. Now, if he were to flip this around and make $250K in revenue and first set aside $80K, then he figures out how to get the same result, deliver in the same quality in the same way, and run the business on just $170,000. This leads to innovation, brighter thinking, and less overspending. This is actually something that the 1% know how to do really well. Another example of this is a couple that I was working with. They were paying all of their vendors first, paying all of their expenses first, and paying themselves last, and they weren't able to keep up with their personal bills at home. So even though their business was making a healthy six-figure revenue, they were still struggling at home. So we flipped things around. They were able to see that they were actually severely underpaying themselves and why they were severely underpaying themselves. And then they were able to make better strategic spending decisions, understand how a purchase was going to affect their personal finances at home, and we were able to strategize for growth in different ways without having to make these big asset purchases. We were able to plan ahead accordingly for them. This is how it works in the profit first system. We do this through a series of bank accounts. So the first account you have is the income account. All of your money gets deposited into one account. This is actually something I even translate into my personal finances so that the incoming money is not muddied or mixed up with the money that's being used for spending. Then on a set rhythm, you decide when to allocate this money to your other accounts. So the first account you allocate to is called profit. So money comes in and you determine what percentage every allocation period is going to go to this profit account. The next account that gets allocated to is called owner's compensation. This account ensures that you are getting paid consistently the salary that you should be getting paid as the owner and usually operator of the business. This is for your work in the business. The next account that gets allocated to is a tax account. We all know we should be setting aside for taxes, but we never do because we need the money right now. So now we're going to actually set aside for those taxes so we are prepared when tax season comes or when that quarterly payment comes up. The last account to get allocated to is the operating expense account, or what we call OPEX. This is where purchasing decisions are made. This is where payroll comes from. This is where you pay your vendors. This is where you decide what can the business actually afford to spend. At the end of the day, your accounts end up looking something like this. It's very clear what money is new money coming in, what money is profit that can be used as a distribution and bonus to you, what is your money that is going towards your salary that you can pay yourself, how much is set aside for taxes, what can you actually afford to spend. If this is hitting home and you're realizing that your business makes good money but it never seems to stick, it's time to change that. My team and I help business owners build the system within their business with their unique circumstances so that these accounts are building every single month. If you want to see how this could look in your business, book a free profit assessment below. The next thing that the 1% do is they know the key important numbers that need to be focused on to actually build their wealth and move the needle forward in their businesses. A business I worked with recently, they were doing $1.4 million in revenue. I went into their books, I did a full profit first assessment. They were working their butts off, and between two of them, husband and wife team, they were only able to pay themselves $60,000. After checking in with them, they said, "Thank you for pointing this out to us. We didn't even realize how little we were paying ourselves." All right, so how do you know what percentages to put in these accounts? Well, first you have to find out where you stand, right? What is the current situation? And then there are ideal percentages per your revenue range in the Profit First book. This is actually something we go over on our free profit assessment calls, so make sure you book yours today down below. As you can see in this very, very simple example, we break down what the current situation is. So this person is bringing in $250,000 in revenue. They don't have profit. They aren't setting aside for it. They've taken $60,000 in pay. They don't have anything set aside for taxes. And then all of the rest is there at the bottom going to operating expenses. This shows this person's current percentages. Let's say this is Jimmy. So Jimmy's taking home 24% and expenses are 76%. And then next to that are the ideal percentages. So we would rather see Jimmy putting 10% into profit, taking home 35% instead of 24%. Most people need to be setting aside 15% for taxes, depending on if you have state income tax or not, I have found. And then ideally at this revenue range, 40% in OPEX. If you are $1 million or above, we want to see OPEX at 65% and the rest distributed through those other three accounts of profit, owner's comp, and tax. This is the before and after of one of my clients who is a chiropractor. When we first started together and I did her initial assessment, her average quarter was $167,000 in revenue. She was taking home 39% at $65,000. She was paying taxes of 9% at $14,569. And then the rest of her expenses were 53%. Now, what's really cool about this was we were not only working on profit together, we were working on growth at the same time. So we obviously grew the top line. She did 307 in a quarter instead of 167. We were able to put 7% aside into profit at $23,000. She was able to pay herself $94,000, which is 31%, and taxes were $36,000. And then her expenses went down to 50% from 53%. So that's only a 3% difference in expenses, but look at the difference in clarity with having these accounts. She now knew exactly what she could take home. We discussed what to do with the profit account, what sort of bonus she was going to take from it, what she was going to use that bonus for. She was an implementer. She moved fast. She was a very driven person, but this is a possibility for you if you're able to implement growth and profit at the same time. So the other thing that the wealthy top 1% do is they make these systems automatic. There's no question. There's no hem and haw. They set aside those certain percentages. There are different formulas for this in terms of personal finances. Some people follow the 15, 65, 20 rules in terms of divvying out their personal finances, but either way, it is automatic. And the idea here is to set some percentages you can stick to, start small, even if it's that profit account only getting 1%. When we first started using this at Matterhorn, we got certified and then of course applied this to our own business. And we had a little bit of debt and startup costs. So I started setting aside 1% in our profit account regardless of what was going on. And even though we only had a few $100s at the end of our first quarter, I was then able to put that extra money towards debt. And I was like, whoa, this actually works. This isn't just a theory, but even 1% gives you those baby steps towards progress. The idea here is because if it is in your account and you are now responsible for setting that aside, it's probably not going to happen. You're going to find a reason to spend that money. Oh, well, we need new blinds, or we need a new car, or we need new whatever it is. There's always going to be a reason to spend that money. This is due to Parkinson's law. Demand will rise to meet supply. If you have an excess of something, the demand is going to meet that excess. This applies to money too. If you have $1,000 in your bank account, you're going to figure out a way to spend that $1,000. But if after divvying out the money into these accounts, you only have $650 to spend, you're going to figure out how to get the same result on that $650. Maybe you need a new computer for a team member. Instead of buying them the fanciest Mac on the market, you can't afford that. So maybe you find a refurbished one. Maybe you find out how to make a PC work. You start to think more about your purchases and get more innovative with what you actually have to work with. And this system of just making it an automatic habit is what is going to actually lead you to your financial goals. A really cool example of this is my dad was actually doing this back in the 80s and 90s with his dental practice. He really wanted a Corvette. Once he got his first Corvette, that was the only car he would drive. My entire life he had Corvettes. But to get that first Corvette, that was like a big goal of his, a big reward for himself for having his dental practice. He just started an account within the practice, and that that was his Corvette fund. And he would put aside a certain percentage. And then after a certain amount of time, he said, hey, I have enough money to go get my Corvette now. And he finally was able to reach that goal. So whatever your goal is, whether that's a personal financial goal, a goal for the business in terms of buying your own building, buying a new truck, whatever it is, you can start taking these baby steps. You've just got to make it an automatic habit that is happening within your life every single week. Look, most business owners work way too hard to wake up wondering, where did all of the money go? The truth is, once you have installed a profit system like this, your business can finally start paying you first. If you want to stop guessing and actually see profit in your account every single month, click the link below to book your free profit assessment now. We'll walk through your current system, find the profit leaks, and how exactly to plug them up. This is a free call, and you're going to walk away with more clarity and a plan of action. I'll see you in the next one.